When you hear about IPOs always having the IPO pop and everybody wants to get in on it, you want a couple of shares, you get it at, let's say, 40, you sell it at 70 or 80, and it's free money. There are a few things that are very different. First of all, the biggest IPOs this year. I saw a list of them yesterday. Some of the companies in it I've never even heard of, but of the 10 biggest IPOs this year, I think Robinhood makes it 10 for 10, that they're all down from their IPO price. So in a way, that's good that the speculative frenzy isn't being overdone right now. I think it was overdone with the meme stocks, the SPACs, and when Bitcoin went up to 67,000 and Dogecoin was up to 60, 70 cents. Now it's like 20 cents. That was a speculative fever. Incredible. It reminded me very much of what happened right before the tech wreck in 2000. If I told you that we're going to have a tech wreck in early 2000, you wouldn't have believed me because things were going so well. How could things go so well and then go so bad just like that? Like that, like the Ironman snap in the Avengers movie, right? I am Iron Man. Okay, nothing happened, everything's okay. If you know what I'm talking about, reference to the Avengers. I do think there is some element of toppiness to the speculative, frothiest part of the market. That could be healthy for the market, or it could mean that the stock market is losing some energy. And if it's losing energy, then that eventually spreads to the bigger companies that were going up, like the top biggest FANG M stocks: Facebook, Apple, Amazon, Nvidia, Google, Microsoft. FANG M. As the more speculative areas lose energy, they start going down. People take their money out of those and they put it into the biggest companies that investors feel most comfortable with. And then those mega cap stocks keep rising because of that, FANG M stocks. Apropos or similarly to the year 2000, right before the tech wreck, there was a lot of destruction in secondary and tertiary stocks. A lot of the IPOs were getting crushed and money was going into the top 10 or so largest tech stocks like Cisco, Microsoft, Intel, Dell. And then finally, when money ran out in those stocks, or they just couldn't quite live up to investor expectations anymore in terms of earnings and revenues, once those started going down, that was it. There were no more buyers and the tech wreck is history, right? So that's what happened there. And that's what this situation has some echoes of.